2026 Economic Predictions, Why a 457 beta Gold IRA move makes sense. Economic signals suggest that 2026 may be a year defined by inflation, volatile markets, and shifting global conditions. As uncertainty grows, many retirement savers are exploring safer alternatives to protect their long-term wealth. One strategy gaining significant attention is the 457 beta Gold IRA rollover, which provides diversification, stability, and inflation protection while maintaining tax-deferred benefits. Get free Gold IRA guide and learn about how to secure your retirement with gold investment. Click the link below in the description to get it. The shifting economic climate heading into 2026. 1. Persistent inflation. Prices remain elevated across many sectors, and inflation may continue to erode purchasing power. Traditional retirement assets may struggle to keep pace. 2. Market instability. Geopolitical tensions, global elections, and trade realignments contribute to unpredictable stock and bond market performance. 3. Uncertain interest rates. While slight rate cuts are possible, they may not stabilize markets. Bond yields could weaken, affecting retirement portfolios. 4. Rising demand for precious metals. Investors are increasingly turning to gold as a safe haven asset. This trend may strengthen through 2026. The strategic case for a 457 beta Gold IRA rollover. 1. Diversification during volatility. Gold offers stability when traditional markets fluctuate, helping balance risk within a retirement portfolio. 2. Reliable hedge against inflation. Unlike currency, gold historically retains its value during inflationary periods. 3. Tax-deferred rollover benefits. When performed correctly, moving from a 457b to a Gold IRA avoids penalties and maintains tax advantages. 4. Non-correlated protection. Gold is not tied to corporate earnings, economic policy, or political shifts, making it a powerful shield against systemic risks. 5. Long-term wealth preservation. Physical gold provides enduring value and serves as a protective foundation for retirement planning. Potential risks and considerations. 1. Custodial and storage requirements. Gold IRAs require approved custodians and secure storage, which adds administrative steps. 2. Higher fees. Storage, insurance, and custodian services may cost more than standard retirement accounts. 3. Short-term price fluctuation. While stable long-term, gold can experience temporary volatility. 2026 outlook. Why timing matters. 1. Economic uncertainty is rising, with inflation, market instability, and geopolitical shifts. Strengthening retirement security is more important than ever. 2. Gold's momentum may continue. If current trends persist, precious metals could see strong performance through 2026. 3. Early diversification offers greater protection. Moving funds before major economic shifts may help safeguard long-term savings. As 2026 approaches, the need for financial stability becomes increasingly clear. A 457 beta Gold IRA rollover offers a practical strategy to protect retirement savings from inflation, volatility, and systemic risk. By adding physical gold to a diversified portfolio, investors can create a more resilient and secure path toward long-term retirement success. Free Gold IRA Guide. Learn about how to secure your retirement with gold investment. Download your free Gold IRA Guide now. Click the link below in the description to get it. Thanks for watching. Please like, share and subscribe.